Hello, hello. Welcome to Al Stock Trades. If you're just tuning in for the first time, I got 10 years of investment experience and I would like to democratize financial information for all walks of life. The thing is, uh, the term when there's blood on the streets, you go in and buy stocks, or the term that you most likely hear when people are fearful, you become greedy. Well, yeah, it's about to start applying now. All right. So in this video, I'm about to share with you some important data, uh, stuff that we talked about in the past, but also some important data that you've probably seen if you stumbled upon a stock market recession video. Again, we don't like to hype here. We don't like to do any of that such. I'm like freaking too old for that. We're going to talk about the science here, the data, and what to do and what stocks to look at after something like this has happened. Okay. So, first things first, let's go ahead and first do a shout out. I'm very excited. Our platform, Our Stock Alerts, was featured on Bloomberg, MarketWatch, the NASDAQ, Benzinga, Yahoo Finance, and Yahoo Money. Also, other platforms as well. I just can't fit it in here. But yeah, we offer a 3-day free trial. Check it out. We have these amazing people writing about it, and they're, we're very happy that we're able to democratize financial information to all walks of life. So now, what happened this week? Well, the Federal Reserve had their FOMC meeting, right? And it was on Tuesday and Wednesday. And Wednesday, they released the outcome. And it's something that we all expected. They're going to do a 50 basis point hike. However, when the Federal Chairman Jerome Powell, and then, by the way, I'm down here. I usually I'm up here, but there's just too many Al Stock Trades going, so I just want to just show one here is enough. So the Federal Chairman Jerome Powell talked about how he essentially wants to, he thinks that he can do a softish landing, right, in terms of not causing a recession. Now, let me just break it to you guys, okay? Very simply here. If you're on a plane, let's say you're going to Southwest, and you're about to exit San Francisco, and you're about to go to Hawaii, Honolulu, right? Beautiful vacation. If the pilot says, you know what, we are going to aim to have a softish landing, but we're going to try our best. What would you do honestly at that point? You'd be like, get me the hell out of this freaking plane, right? So the market is experiencing some hiccups. But based on the data, guys, okay, as you can see here, based on the data, every time this is the consumer price index from 1921 to 2022, right? Every time we had an increase in CPI, we've always been dealt with, you see this grayish line or light bluish? We've always been dealt with a recession, okay? We just can't escape it. Now, we did talk about this on the video. If you want to go back to April 21st and look up Clover Health Stock Market Analysis Part 1 of 2. And as you can see here, we talked about there's different scenarios that happen, such as like Saudi Arabia pumping out more oil to help with the Russian Cold War to help decrease prices. That temporarily decreased things here of different scenarios upon the time of crisis that those people were in. But overall, if you wait a couple years, if you wait a couple years, recession. A couple years, recession. A recession, unfortunately, is like kind of Thanos, unfortunately, snapping his finger with the gauntlet. It's going to happen, right? So the question is what to do and how to react to this, right? So if you look at the 10-year minus the 2-year Treasury yield curve, you're starting to see it actually inverted a couple weeks ago. Now, what the hell does that mean? Well, if I invest in let's say, bond, a Treasury bond, I would want to, the longer I have my money invested, theoretically, I want to be paid more. So this takes the 10-year minus the 2-year. So since now either the 10-year is shrinking or the 2-year is growing. So what this basically is telling you, when you have an inverted yield curve, it's saying that if so happens the economy tends to give you more money for the 2-year, the outlook for that 10-year is going to give you less money, meaning that people's economic projections, economic outlook for the 10-year is not so good, indicating there might be a future recession. Okay. Now, another thing I want to talk about, and we got to go to the exclusive daily briefing here. We did mention here on April 28th, we got for the first time, we got a quarter of unexpected GDP decline, which shows you that the economic activities are contracting. We need one more to instigate a recession. Now, it doesn't help that Shanghai, China is under lockdown because of their COVID measures, and even they are constricting. And Europe is also so. And you have the Russian and Ukraine war. There's a lot going on right now. Okay. However, President Biden and the rest of the economic communities don't use the 10-year minus. Let me just point it out to you. They don't use the 10-year minus the 2. They actually use something called the 10-year minus the federal funds rate. And what that is basically telling you is that it hasn't inverted yet. This is a greater predictor of a recession than the 10-year minus the 2. Now, normally you would get the 10-year minus the 2 and the 10-year minus the federal funds rate going down. Like, for example, back in 2020, let me go back here, they both went down around the same time. However, now you have something called a inverted yield paradox. That's what I'm calling it, right? And this is telling you recession, and the other one is telling you not yet. So I've never seen this before. No one has. No economic person has. All of the investors of the whole world are shaking their heads. But it's very clear that a recession is inbound. And how do we know that, and how do we deal with it? So if you go to the kind of buy the dip, so 2022 is the second worst buy the dip year since 1974. Okay. So we thought we had a bad one in 2018 here. And then we're right back onto it, right? Essentially, the Feds were able to switch gears. However, we are avoiding buying the dip since we're acting like it's 1930s to 1970s, where a lot of people were avoiding buying the dips. Now, listen, what did Warren Buffett do during these times? What did Benjamin Graham, who coined and created the intelligent investor back in the 40s, what were they doing during this time? I'm first generation, the roaring, I can't say that word, the roaring 20s, right? Everyone was like, buy stocks. And then you got that Black Monday, and no one wants to go back in the market. But then all of a sudden now you got these people coming in, and these are the real investors. These are the real wolves of Wall Street. Okay. So exactly, and if you do dollar cost averaging, you're going to do well, because overall you're going to get to the arithmetic mean, and you're going to end up getting some high ones and also some low ones as well. So if you go here now, and you can see we had a tremendous buy the dip. In fact, here, this 2020 year was crazy. Kind of reminds you back in the 1933 when it was crazy, literally right around the same percentage, as you can see. We had a whole people margining out. Stocks only go up. YOLO. This is it. Let's put our money in. And all of a sudden, now we're heading towards possibly not a dead stock market, but a stock market that's pretty not interesting. But this is where you do your best work. Let's continue. So we've had some consecutive down days, 4 consecutive 1% down days declined. It's when the S&P closes out 1% or more. And the last time we've seen this type of selling pressure, it's very rare, was a decade ago back in 2011, which you can't see in this graph here, right? So what if you were to take this data in and we were to parcelate it from 1928 all the way up to 2021, what you can see here is exactly, honestly, that's pretty much it. Be greedy when others are fearful. But here's the data for people that want to see this, for people that want to be like, okay, because there are some bearish ingredients to this video I need to show you guys exactly that. So In the short term, as you can see, when we have this signal, when you have 4 consecutive weekly closes down 1% or more, especially from 15% all-time highs around that area, within 1 week, 2 weeks, and 1 month, you close out negative. So the next couple of weeks are going to be a little choppy. We're going to have to see CPI data, which you can see in our economic projections in our private Discord channel, which we offer a free trial here that's been featured on Bloomberg, MarketWatch, NASDAQ, Benzinga, Yahoo Finance, Yahoo Money, and a whole of other economic, really top national journals for stocks. What the day that I'm looking at is a CPI up on May 11th. That's a big one. Okay, that's a big one. So with that, I think the next couple of weeks are going to be hairy. We got to see if we can fix inflation. That's the biggest worry right now for Americans. But if you were to essentially be greedy, a year from now, you would be up 15%. And that's from the SPY. Okay. And the Z-scores are pretty damn significant. Okay. So there's that. So now let's get into the meat of this. Okay. So let me raise my head up a little higher so you can see me here. Okay. So what do we do? What stocks do we invest in? What historically does well? Well, listen, you don't have to be a genius to do well in the stock market. In fact, if you look at the top economists in the world, they're not wealthy. They have higher IQs than Warren Buffett, but they're not wealthier than him. You need to have a sense of common sense when you invest in the market. And you got to look at stocks as a business. This is a business detached from the fundamental, detached from the worries of the economy, unless it affects their underlying business. So, what are stocks that are going to be good during this time? Well, one that sticks out to me is healthcare, which is right here. As you can see, look at the 1 year on here. And the other one that sticks out is this one offering 51%. And would you look at that? Insurance, healthcare, and insurance. Again, what essentially did Warren Buffett invest his money in? Geico. Okay. You can't go out without insurance. There's that. Another thing you want to take a look at, and I'm not too sure if it's on this graph, but anything that is government supported. You see, Clover Health is government supported based off of the CMS and all these other things. They're trying to essentially get into a position where the government pays the tab because they're doing the government's job that they can't honestly do. And with their AI, they're able to parcelate that and save everyone money, and then they can take that to themselves and the shareholders. But as you can see, when there's a recession, Joe Schmo, who has a cardiac problem or X, Y, and Z, is not going to stop his insurance. That just doesn't happen in the United States. People are willing to keep a job just so they can have healthcare insurance. It's just that's the name of the game when it comes to these types of stocks. Okay. I do believe Warren Buffett looked at Clover. I think that he wants to see it a little bit more improving. I don't think he wants to buy out the company altogether, because then, in terms of increasing shareholder value, he doesn't like to come in until the middle stages when the company is a mega billion-dollar company. Because again, he can buy up the whole company and then people will go in and buy it and raise the price. But just letting you know, I've been looking at Warren Buffett type analyses for over 10 years. I know when I see a stock that has that type of ingredients, okay? And that's one of them. All they have to do is to fix their profitability, which is in 2023. All right. So I hope this was a good wake-up call so you guys can see, take a screenshot of this, right? And if you guys want full access to everything we offer a 3-day full trial. If you don't like it, you can always cancel. But I just want you guys to know this information because this is very critical, okay? So now, I don't want to name names, but there have been a lot of YouTubers out there recommending you buy silver, I'm putting my money in silver. Now, if you before I go in there and before you go out there and talk about these things, my recommendation is do some research. Because if you were to buy, normally everyone who understands commodities understands this. I mean, if they've been in the market for a long time, right? So if you look at May and June, we're here right now. Historically, May and June have been the worst times to buy silver. Okay, and the reason being is it's just that's just how the dice roll if you look at the economic data. And in fact, if you look at when it was trading at its highest was during the 70s and 80s, that's when silver was extremely up, right? So we're almost like a copy and paste. We're living in a time where inflation is high and we're essentially living through this. So if I was to go double down on silver, would actually be in July, because that's when this is taking data over multiple years here. Okay. This is a lot of data here. We're going back, guys. We're going back. Okay. So, so there's that. Now, if you want corn and people that trade corn, again, this is, I'm a fundamental investor, right? So corn has still some time to run up. If you guys do trade commodities, corn is definitely has a lot of room to go up. And if people like wanting to continuously make money in the market, right? So going further here, the I call it the double the AAI bull ratio fell at a historic low. It's been a while since we hit this low before, and usually within the weeks and coming months after, the returns on the S&P is not as impressive. However, if you look up the 6 months and 1 year, once we hit this, we tend to rally. In fact, a year we rally 20 freaking percent. Now, what is this for people that don't understand? Well, listen, guys. When this is a retail questionnaire that asks retail investors. Whenever retail investors are the most bearish, it's a sign to buy, okay? Because you want to do opposite of retail does, because retail, unfortunately, is dumb money, okay? Now, we also have a momentum reversal. The question is, usually when we go below this momentum, we do see a signal that is bullish. However, you can see the line has yet to drop to get to these extreme levels that we've seen. And I think if we're comparing ourselves during this time frame with inflation, I think there still could be some red that we might experience before we get a momentum change. And I'm going to be monitoring this with all my other economic indicators. So if you look at the 2 to 3 months rolling average here, it's not gonna look pretty. Based off of the data that we have, we're gonna get some negative returns. However, just like what Kent said, if you go in and the way I'm doing it is my high conviction stocks, I'm doubling down. In fact, I'm day trading them now if they're especially, like, let's say if they're volatile, which is amazing, right? I have two different accounts, short term and long term. If I get stuck holding the bag on the short term, doesn't matter. I have high conviction in those stocks. We get a 13% return, 80% positive win rate. Okay. So now, if you look at the Barron's Big Money Bulls, I mentioned this in the last video I talked about. This gets a little tricky because this is dangerous because now the bulls have left the market, and this indicator is something that I follow because when the big money leaves, the stock market tends to do badly. So if we have two different types of tables, we have the least bullish and the most bullish. This is when they leave, this is when they come. Don't mind all these numbers. This just takes dates from different time points. If you look at the average, when the bulls leave, they're the least bullish, you get an average return of negative 1.1%, indicating that these people, they know something and they carry the money for the market. Now, when they're most bullish, we get a 7.3% return 83% of the time. So we're going to be waiting on this flip switch. And this flip switch may not happen until we get the CPI data to see it's actually inflecting downward. So defensive stocks. What are some defensive stocks to look at? You want to look at consumer staples. You want to look at utilities, healthcare, real estate, right? If you are of needing these types of stocks, you would go into these specific funds, see what are the major holdings of these funds, see each stock, and you can use for people that are in our Mastering Stock Market course, use the intrinsic value calculation to find stocks that are undervalued. Now, if you want to take it to a step further and get some multi-bangers, what you want is you can go in here and look up sector rotations and essentially see what sectors are at the lowest. Take the bottom 3-4 sectors, and you can see them from the color code here. Like, for example, technology is pretty low. You got communication services pretty low. And you would essentially find stocks that are extremely undervalued, that have been beaten down, and then you would invest in them. Obviously, after thorough due diligence. Now, gold miner stocks, what's going on with gold? Well, gold has been increasing. And if you look at Peter Schaff, whatever his name is, he comes out of the woodworks every time there's a recession. I told you so. And what he does is he starts selling. He has, if you go, honestly, we could go to his, Twitter. Let's do this really quickly. I think this is really helpful. So this gentleman here, he comes in and he talks about how the stock market, he brings the financial crisis, the Great Recession. It's about to pop. It's going to be a bigger bubble than that. He's talking about all of these things. And this guy is like a broken record. And at one point, he is going to be right. But guess what? Look what he basically gives you here. He tells you to go in and buy gold during these times. And I'm telling you that we are at a high level of where gold is actually pretty much an expensive, okay? And it's gonna go in a bull and boom, it's gonna bust. And he wants to sell you gold. So you go here to his little Schaff Gold thing, and you can buy gold and silver, and you can just go in and I believe that's him. You can go in and buy from him, right? And he has little tweets here. And then guess what? Guess what he takes? He takes cash. He takes cash, guys. Okay, he's talking crap about cash, but he'll sell you the gold, and then right. But then guess what? Then comes the bust. Gold starts dropping, inflation 2%. We get back stabilized, and then this guy says, "Guess what? We can go ahead and we can, buy your gold," and they'll buy it at a lower price, right? And then they'll give you all these fees, cleaning fees, authentication fees, transfer fees, transportation, and all this garbage, right? And then you would go into that. He buys them up here when it's literally nothing, and then the cycle continues and he sells them. So just understand that, I've been in the market for a long time. I've seen these patterns, and it's just really annoying. Okay, all right. So, I'm looking at this here, momentum reversals. We'll talk about this later in terms of momentum reversals, but the biggest thing here I want you to know is that copper is reversing. Okay, gold is about to reverse, copper is reversing, and what that's telling me is that inflation is transitory with respects to it's going to start going down. And once that happens, the market will rebound. So, a big shout out. We have developed pretty much a artificial algorithm machine learning leading edge that helps you calculate the intrinsic value of stocks. Now, not as precise as our Mastering Stock Market DCF, but it's enough to help you parcel out some stocks. So one of our members on April 30th did a DCF by just saying AL/DCF Zim. The stock price at the time was $55, which was right around here. And then it said the price is $68. And when you look at that now, it's $65, right? You can see the increase. So our platform, I'm very happy with it. It's working. It's doing a lot of good, and I'm very thankful to be a part of this wonderful community. We've been featured on a lot of leading. We're on the freaking NASDAQ, the Bloomberg market. We're on really amazing forums here advocating for our program. And I'm just we offer a 3-day free trial both for the monthly and the yearly, and it's under $10. It's literally $10 for the yearly a month, which is, our goal is democratizing financial information. Here's the Bloomberg articles here and all the articles if you're interested in wanting to learn more about what we do here. In fact, the website has the most information, and the results speak for themselves. These are all of our members with the profits they've been making during this bear market. This is what's included on the inside of everything we offer, because we've injected an artificial intelligent technology with inside of our Discord, hence the brain machine here. We offer price targets as well, buy and sell alerts with the AI that we have, especially with calls and options, daily top short squeezes and gamma squeezes. And here's some more video testimonials. And so I hope to see you guys on the 3-day free trial. I think, I'm just very humbled to be part of these, essentially get the needed support from Wall Street itself to help bring this to the have-nots of our society. Al Stock Trades introduces efficient services to optimize management and investment of money by low and middle income groups. And that's the goal here. We're trying to democratize financial information. I'm sick and tired of the rich getting richer and the poor getting poorer. It's time to do something about it, which is why we created this. So I hope that this was helpful. If you guys have any questions, please drop them in the chat here or in the YouTube chat. And I hope to see you guys at alstocktrades.com and to continue our discussion with the markets. And other than that, God bless. Market went 6%. I'm up 7% with the help of the Discord. Hey, I appreciate that, Dr. Sam. I need to check out your mushroom. You mind if you put it on here? So I can take a picture, or just you could submit it down in the Discord. But yeah, we're a beautiful community. We're growing, and the more we grow, the more resources will be implemented. The more we can, just improve because there is, you guys have like a Bloomberg terminal. You guys essentially have like your own terminal in here. You can look up senators, stock buys and sells, ARK buys and sells, anything you can think of stock market, we have it. That's pretty much what I did. Like that, anything you want, we got support and resistant lines, Fibonacci, right? So we got it all here. So I appreciate all the support to all the members of our Discord here. And it's really a privilege and honor. And I can't wait till, all of our stocks is sent to our intrinsic value calculations, and we'll make a channel that is who became millionaires during the time here. And that'll be really fun because we are going to get some millionaires. All right. So God bless you all. I'll see you guys on the next one. I'm going to get back to studying. For people that don't know, I'm a medical student aspiring to become a brain surgeon. That's my passion. But the reason why I created this platform was that by the time we see patients that are historically marginalized, that are in the lower socioeconomic status areas, they tend to have diseases that are preventable, that unfortunately, because they lacked healthcare insurance or the monies needed to live a life of, let's say, getting healthy food, it's honestly too late. And if you look at the rich versus the poor, the rich invest their money. They don't spend their money on the nice things of life. I mean, just look, I'm very humble, right? I don't really, my satisfaction doesn't rely on getting the newest X, Y, and Z, or the Gucci shirt or Salvador Ferragamo, to name a few brands. I don't really do those things. My philosophy is what I like in this, I guess, simulation of a world we're living in, is I like to find stocks that no one's talking about. And it takes time. You got to use first principles thinking. And I love that. I love that feeling when you're right, and humbling. Also, I love it when I'm wrong too. Um, and it's just really amazing. It's just getting that, investing your money, watching it grow like a plant. Then you take that money and invest it in something else. Like, we have a nonprofit food program where we distribute millions of pounds of fresh produce to low SES areas. SES stands for socioeconomic status, for those public health people out there, non-public health. But overall, that's all I have to say for you guys. It was an honor and a privilege. Sorry this video is long. It's just, there's just a lot going on in the market right now. And I can make short videos later when I get that YouTube studio set up. It's taken some time because a lot of the products that I've purchased are still in China. I got a Mac Studio that's still in China. There's an Apple Center there. They haven't built it yet. It's still pending. So there's just a lot of things that we're going to be investing a lot in our YouTube. But in the meantime, we've built the crap out of this Discord. And this Discord has so many AIs that you guys have it all. And just for people that want to see it close up of what we offer, look at everything that we offer here. Let me this is just impressive. Everything that and the list goes on. Doesn't this look a little creepy but cool? I like it. But anywho, that's Brain Machine. All right, guys. God bless you all. I'll see you on the next one.